Well, it happened. The Bitcoin halving is here. Congratulations. Woo! And drink to that. Now, if this is your first rodeo, then let's talk about the Bitcoin halving, what it means for the market. We're sparkling water over me here. And what it means in the new reality of what it means for the supply of Bitcoin. Because, yeah, at the most simple level, the block rewards given to miners were just cut in half from 6.25 coins per block every about 10 minutes to 3.125 coins per block about every 10 minutes. Or said another way, the daily supply of coins goes down from 900 coins to 450 new coins being produced by miners every single day for the next 4 years. Whoop-de-doo, right? Who cares? Well, Bitcoin halving has been one of the most important events in the cryptocurrency market since the inception of this entire asset class even started. It has been our North Star in times of darkness and fear. We've had the Bitcoin halving to look forward to, and it has also been our rocket fuel when the good times come back. So let me throw some numbers, some charts at you here in this video, because the Bitcoin halving, this is the true start of the crazy times in the market. In fact, the supply crisis issue that's going on right now is getting so crazy that big banks are starting to reach out to Bitcoin miners directly to try and get their hands on coins because the OTC desks are running out. The amount of available coins on Coinbase cratering back to 2015 levels and only going down. Do you see the problem here? The supply crisis was here before the Bitcoin halving. Now the supply crisis is getting much, much worse. And I know that Bitcoin hitting a new all-time high price before the Bitcoin halving did make this time different. But that price action does not change the reality of the economic tsunami coming for crypto. Any short-term price fluctuations up or down in the next few days, it's just noise. It doesn't really matter because we are in the big game now. The big boy pants are on. The demand is surging, and the emission of new coins just got cut in half. The effect of that's not overnight, so don't expect Mega Moon tomorrow. But in the coming weeks and months, the impact will become very, very apparent. Now, from the first halving to the first major price peak, we saw a 95x gain. From the second halving to the cycle peak, we saw a 30x gain. From the third halving to the 69K peak in 2029, we saw a 7x move. Law of diminishing returns seems to be in effect. Maybe. A Fibonacci projection gives us a likely top of about $210,000, maybe $250K in late 2025, Pico top, which makes a lot of assumptions, of course, such as the 4-year cycle actually staying true, that this is not an accelerated cycle, or that it's not a super cycle and goes way longer than people think it will, that the ETF demand is adequately bullish to keep pushing us up to those high prices, and perhaps that this projection is simply not bullish enough and that the price is going to break the Fibonacci line at 3.618 and go way higher, $500,000 Bitcoin this cycle. You will see those insane numbers being thrown around pretty soon. I don't discount the possibility, but I also want to put out a warning here. I don't want to succumb to irrationally bullish thoughts when the charts are showing something different. I want to see what I'm seeing, not what I want to see. That, by the way, would only be about a 200% return from the halving price to the peak if we got up to around 250K, which would be a significantly diminished return compared to previous cycles, simply because the price at halving was so much higher than we had previously seen it. Okay? But perhaps that means no one is bullish enough, including me. And maybe we're just going so much higher than anybody actually anticipates. By the way, if you're holding altcoins, then get ready, because the total altcoin market cap went up about 2,000% from the Bitcoin halving to the peak last cycle, meaning you could have basically thrown a dart at a board with different altcoin names on it and nailed pretty much a 20x just by buying and holding any altcoins. The same thing will probably happen this time, although maybe only 300 to 400% total market cap gain for all altcoins. Again, diminishing returns are in effect. But adding $2 trillion to the total market cap of altcoins, or more, maybe $2.5 trillion, will mean that things will pump way more than you think. It'll be way crazier than you can possibly imagine right now. Up your targets. Now, before I break down the insane demand that will drive prices so much higher this cycle, I wanted to let you know about my newsletter. Look, I get it, okay? Wife, kids, job, dog, OnlyFans. Come on. Those girls need support too. Life's busy, okay? but you still want to stay on top of the cryptocurrency markets, let me and my team of researchers help you find the latest opportunities in this market. Our newsletter is regularly covering the hottest airdrops, deep dives on altcoins, altcoin alpha, DeFi, meme coins, NFTs, and much, much more. We spend over 40 hours a week so you can read all the latest happening in the markets over your morning coffee or on the train to work. Join our 120,000 weekly readers for free using the link below on YouTube or the pinned comment on X to sign up. Now let's talk about the demand factor. Because even before the Bitcoin halving, the Bitcoin ETF was driving wild demand. And yes, it's not a constant. We have had about $13 billion in total positive inflows into Bitcoin ETF products. That's new money entering after excluding the $15 billion that left from the Grayscale Bitcoin ETF fund and largely went into other ETFs. But that $13 billion number is insane because that's about 216,000 new coins worth of demand. Spot ETFs currently hold 827,000 Bitcoin. There has been a lot of flow from Grayscale to BlackRock, Grayscale to Fidelity, Grayscale to ARK as people reposition to more cost-efficient ETFs. Grayscale's fees are too high, but 216,000 new Bitcoin is an insane number. Let's just look at the 100 days from January 11th until the Bitcoin halving. That's an average of 2,160 BTC per day in demand from Bitcoin ETFs in the USA. And this number includes weekends. If we exclude the weekends, the public holidays, when the ETFs don't actually trade, then the actual per day demand during actual trading days is actually much higher. But let's just use 2,160 as an easy reference. During that whole period, Bitcoin ETFs on Wall Street have daily bought 2.5 times as much Bitcoin as miners were actually producing on a daily basis every single day. Some days more, some days less. We had $1 billion day and a $50 million day, but insane demand overall. If we can see these numbers continue for the rest of the year, then that's wild. That's wild. Because remember, from today onwards, miners are now only producing 450 Bitcoin a day. Wall Street demand, if it stays the same, is nearly 5x this number. And this is only US Bitcoin ETFs, nothing else accounted for, not accounting for any other spot buyers on Coinbase or anywhere else. The new ETF reality is insane when combined with the reality of the halving. This is a once-in-a-market liquidity event running into a bullish supply reduction mechanism, and demand is only going to pick up. Check this out because this is mind-blowing. South Korea is very likely going to be bringing out a Bitcoin ETF sooner rather than later. It has literally become a campaign issue in South Korea. People want Bitcoin ETFs, and they are going to get them. South Korea is a crypto crazy nation, one of the wealthiest nations in the world. So I expect them to be popular when they get released. Then there's Hong Kong. Hong Kong regulators literally asked companies to come in and file for an ETF, and companies did just that. Here's two of the biggest. We have the $230 billion Harvest Fund, and we have the $284 billion China Southern Fund. These are huge companies. They've both applied for Bitcoin ETFs in Hong Kong. So literally just a question of when, not if, these are getting approved, since, again, the regulators literally invited institutions to come in and apply because they wanted to get these products out in the market. This is opening the funnel for mainland China money, and of course, Hong Kong money, to get into Bitcoin. Huge demand potential, billions coming from this source alone. London, they came out and confirmed the launch of a Bitcoin ETN, basically a Bitcoin ETF, a spot Bitcoin-backed product, on May 28th. Another major market from one of the world's biggest economies, turning on the spigot, flipping on the open sign, whatever you want to call it, for Bitcoin. Over in Germany, $900 billion German financial giant DWS is launching a Bitcoin ETC. Again, basically an ETF, a spot-backed Bitcoin stock-traded product launching on the German stock exchange. Again, just one of the biggest economies in the world, one of the biggest financial institutions in the country, rolling out the orange carpet for Bitcoin. Australia's Bitcoin ETF rumored to be deploying soon as well. Brazil, Germany already have them. All these countries rolling out spot Bitcoin ETFs, this will add a whole new vector of demand. And while I doubt they will match Wall Street, they don't have to. Even if they buy 1/5 as much as Wall Street, all those combined, the UK, China, whatever, then they will absorb all of the daily production from Bitcoin miners. Crazy. No one is bullish enough. Wall Street, where are they going to get their Bitcoin? You, where are you going to get your Bitcoin? Countries, where are they going to get their Bitcoin? Sovereign wealth funds out there rumored to be buying up huge amounts of coins right now. Billionaires, millionaires. There's just not enough. Demand is surging to unprecedented levels. And the Bitcoin protocol just decided to cut the emissions in half. Of course, it's all programmed in, but it's crazy bullish when you understand the fundamental realities of everything I've just said. Happy Bitcoin halving, everybody. We'll do it again in 4 years. Thanks for watching.